All right, what's going on, everybody? Happy Thursday. It's been a little while, so let's jump into it. I'm not going to keep these videos as long moving forward here, but so let's jump into it. Is the party over for equities? I don't know. We'll see what we can do with that in the short term. And first thing I wanted to point out here is gold. So gold after hours here is up another 1.5%. And, what I was looking at with gold in terms of a geopolitical risk as the main driving factor is wrong. Certainly, geopolitical risk does drive the prices of gold. But I was looking at it in terms of more of a hostile geopolitical event, as opposed to what is happening currently is the standard of international trade is sort of getting turned upside down. And so that is something that, gold is pricing risk of international trade. And now, how can we think of that in terms of a danger for liquidity, global liquidity, which flows into equities? So the first thing here that we'll probably want to take a look at is regional banking. So the regional banking ETF is down 6% today. Is huge. That is a huge move. It's terrible. Just a massive move straight through the 200-day moving average. If this persists, could this be a forewarning? But if this persists, this will tighten global liquidity. Now, another event that is not good for the macro environment, just like we see with regional banks here. We've got XLF that was down, and this is, the S&P 500, financial ETF here. So, down, 2.8% on the day. It's huge. Never could recover above this 50-day moving average. So these are not a good sign. Something else that I was referring to here is Bitcoin. When was this? Last Friday? Was this Friday? 10/10, 6 days ago? Sounds about right. Tomorrow would be the 7th day, a week later. So last Friday was, I think, the worst single day for the S&P 500 in maybe a decade or something like that. I forget exactly, but terrible day. Also for Bitcoin as well. I'm no longer on Twitter and no longer really follow the news, but I was even able to hear about some smaller funds that are in serious trouble because of Bitcoin and crypto the day that they had on Friday. I believe that it was the largest drawdown event for crypto ever. Like the most amount of liquidations ever. And if that is in fact correct, then there are going to be smaller funds that will, blow up and go out of business, which will tighten, liquidity, and which is not good for equities. So now let's go over to. So that's gold, bonds, or gold, Bitcoin. Now, in terms of Bitcoin here, if it's not going to hold this level, let's just talk about some levels and what I would be looking for a trade. is if it's not going to be holding this level here, then look for a move down to the 200-day moving average. I would not be shorting Bitcoin here. But if this moves down, I'll look for some confirmation around the 200-day moving average, and I will take a trade around the 200-day moving average back up to about the $110,000 price target. I'll probably do about 108,000. I rarely hold anything to my exact price target. So that's a trade I would be looking for in Bitcoin. The reason I wouldn't want to short anything here is because of this massive move to the downside. Now, could it continue to the downside from here more? Absolutely. It's just the risk to reward for me is not there at this current time. Gold, as of right now, there is no trade for me to be had in gold. Again, you would have to look for a better risk to reward, which I absolutely will. And on any other pullbacks that will be happening, I will take that trade, and then we'll talk about it. I'll post videos about it, but as of now, I'm not touching this one way or the other. Okay, so now let's go over to the volatility index here. So the volatility index, we're up here in the 20s, 25, and this is higher than it's been for a long time. So what we can think about in terms of elevated VIX levels is more volatility in equities. So how can you play that? You can expect with greater volatility in equities. You can trade range more than a typical momentum trade. So what you can do is a smaller move, and this would have to be a little bit more actively managed than normal, but you can go for a smaller move on more leverage and take a range trade, maybe on an hourly basis. And because there's going to be, you can expect more intraday volatility or just more volatility in general. And so that's how you can take advantage. That's one way that you can take advantage of this current market environment and an elevated VIX level. Another way you can take advantage of an elevated VIX level is through selling options. So, for example, you could do, and the reason as to why selling options would be good in this current market environment is, well, because implied volatility is up. So you'll get more money for those options contracts. Now, an iron condor would be a pretty decent play to do. In selling options, you can be wrong on the direction within a couple percentage points or whatever, and you can still make money, especially in an environment where volatility is high. Again, because you're going to get more money for those options contracts. So those are two ways that I would be trading this current market. And now let's go over to so we could go over to bonds here real quick. And in terms of a bond trade right here, there isn't one for me. There's no informational edge here that I would have. The bond market is pricing in 100% chance of rate cuts here by the end of the year. So if our market, what about rate cuts? Our market's pricing that in. Yes, they are. Now, also in terms of global liquidity, the Fed's balance sheet is continuing to shrink, and so right now, in terms of bonds right now, they're seeing inflation as less of a risk, which is why we're seeing sustained bids in bonds. So, keep that in mind with just an overall theme for the current market is, risk assets starting to really sell off. Regional banks really taking a hit. Bond market is not really pricing in inflation as the number one risk, or less of a risk. Bonds are bidding. Gold is through the roof, and Bitcoin is really down. So any sort of real momentum trade, I would stay away from in this current environment. Now, of course, that doesn't mean that that's the correct thing to do or not. Typically the way I look at things is I have a general theme for something short term, and until proven otherwise, I change the strategy. As of now, that's what I've been doing and going with. So now we'll go over to so that's pretty much the overall theme. Now, with that being said, the macro environment continues to be good for equities in terms of the economy. Walmart, for example, is at an all-time high of clicks on their website. So those sorts of things that we're seeing is not an indication that the economy itself is in any danger. It doesn't mean things can turn around, but you've got retail giant like Walmart hitting all-time highs. The Russell just hit all-time highs. This is not a time to panic. That is for sure. So now let's go over to indexes here. So we got NASDAQ, still kind of in this range, but a very big range intraday. Lots of very big moves that are happening intraday, so you can take advantage of that. Whereas typically you don't see that, and you want to get on more of a directional trade on and hold it for longer. Now, in terms of where does this look like on a technical analysis basis, the huge candle here on Friday that we have is a huge warning sign. It's a terrible, terrible thing to see. When you see something that is way out of the ordinary, you should always, or I always, get way more skeptical. Now, the chances of this continuing down further after that day were pretty low. So, I did take advantage of, some trades back up into the moving averages, like the 21-day EMA, kind of what people would refer to as sort of more mean reversion. And so those are still going to be good trades here moving forward. Like I said, any sort of trending trade in this, I would stay away from this. I am staying away from that. Now let's go over to Dow. Dow has broken its trend line here that's been in place since August. And so again, what are you supposed to do? You can take a trade off the 50-day moving average, which I didn't do in Dow, more in NASDAQ and then in Russell as well. But what are you supposed to do here? Is this an obvious trade? Is this You could use it with the 50-day moving average as an obvious way to get out. But given how weak things were on Friday, I would wait for confirmation. Whatever that confirmation is for your current strategy, I would wait for that to place a trade. Okay, and then we'll go over to Russell. And so Russell here, once it broke over this trend line, what day was this? A couple days ago. I placed a trade here in Russell. I'm out of it. But for example, if you kind of like zoom out and think to yourself, okay, well, Russell just hit a new high. Walmart just hit a new high. How bad could things really be, right? So again, looking for confirmation one way or the other. But yeah, nothing really to be had here. In terms of Russell, it's really not that concerning. Obviously the Russell is a lot more cyclical, and so with GDP numbers, things are good in that aspect. So whatever, do with that what you will. The S&P 500, again, very similar to NASDAQ here. Just wait, this could be a fantastic trade one way or the other. If this can recover and go higher, we've got, a whole month, right, of a move higher. And if this fails sort of violently, we'll have plenty of time all the way down to the 200-day moving average. So there's nothing to really do in terms of a directional trade. Some sort of mean reversion or some range bound trade is a pretty good, trade to take with a little bit more leverage, a tighter stop. So that's that. Now let's go over Mag 7 and then sort of call it. So we'll start with Microsoft. And Microsoft is holding up just fine. None of this meets my criteria, so I want to place a trade here. But the thing that is really of concern is what if this bull market is in fact over? If it is in fact over and we go into a pretty nasty bear market, this gap down here will get filled. So down to the 400s level. So again, let's say this bull market fails and turns into a bear market, we'll have so many fantastic opportunities here. Amazon, I said the 200-day moving average here doesn't meet any of my criteria. I don't know. Apple. Yeah, I mean, this is sort of looking like a little bear flag type setup, right? But again, we're still in a bull market. I'm not gonna go out on a limb and just short something here, although it does look pretty enticing with Apple. Meta, same thing. Is this a bear flag or is this forming support here? We don't really know. No need to try and guess, right? It doesn't do any good. Google. Wow, Google hit an all-time high today. I really did not know that. Completely rejected. That's never a good sign, but Google still looks pretty good. All right, let's go look at NVIDIA. Yeah, I mean, NVIDIA, shoot, again, I would wait for a nice strong move back above, good support here at the 50-day moving average, and then a really good strong move back above these moving averages here. And that could be an awesome trade. Now let's go over to Tesla. Yeah, just, maybe sort of wait for confirmation. It's going to be the same sort of theme here going forward. If you don't have to be placing any trades, I wouldn't be placing any trades in this current environment. There's no reason to risk any of it. I like selling options is pretty decent strategy, but if you don't need to place any trades in this current environment, I certainly would not, and wait for just direction one way or the other. Now, in looking at all of these Mag 7, I'm not concerned. I'm not concerned as of yet. I don't really have any exposure, so I don't really have an opinion one way or the other. And typically what I do is I try to refrain from having an opinion. I just sort of let the market tell me what to do, and I'm not really in anything. So it's kind of difficult to tell. Volatility has spiked. We've had some terrible days here. Some things are starting to fail. You got regional banks really taking massive hit. Financials taking a huge hit. Bitcoin, gold is still ripping. So, why there's nothing to really risk, in my opinion. So that's it. And man, yeah, that's it. Nice short video, and we'll catch you guys later.